Dear all, it's great to be again with you in our fourth podcast. It's today my really great pleasure to welcome Mr. Eric Assimakopoulos. He's the founding partner and managing partner of Revetas Capital. So Eric, welcome. Pleasure to have you today here with us.
Thank you very much. It's a pleasure to be here. I hope everyone is safe and sound and healthy in these trying times.
Exactly. So, Eric, I'll just shortly say you have over 30 years of experience in real estate, but maybe if we focus on CEE since 2009, you've been focusing on the restructuring and recapitalizing distressed real estate in CEE. And you've been invested over 1.5 billion in the real estate assets in the region. So my first question actually goes, what is the main real estate asset class that you invest in?
I don't think we invest specifically in a main asset class. Our thesis and our strategy, particularly and specific to Central Europe, is around the university cities, where growth is coming from in terms of both highly educated multilingual college grads on one hand, and large international blue chip companies that are coming into this region and into these university cities in order to tap into the labor force and the skilled labor force. And it's not dissimilar, frankly, to a strategy that has evolved globally, where you see major US, European, Asian cities where there's a very strong component of universities, whether they be technology universities, economic universities, medical, whatnot. And you've seen over time the corporates growing into those markets. And so that's the thesis, and that's where our strategy is focused. Within that context, in those specific cities, Revetas has been a agnostic investor in terms of what type of asset we invest in. I mean, we've been in the hospitality business for over 15 years. We've been 30 years doing various functions of office, retail, residential. And so while we look at a city and we see where the growth is coming from, part of that is obviously an office component because we see a lot of growth there, but that transcends downwards into residential, retail. When I say retail, I mean shopping centers, but more amenity retail, hospitality. So these cities grow, and all of the different real estate components generally grow around them. But you need the growth. So that's where our strategy has taken us over the past 15 years in Central Europe.
Now that you mentioned student cities, do you also invest in student accommodation? This is something that within hospitality has been quite a big topic lately.
It's a very big topic. It's a asset class that we have looked at very closely. We have not yet invested in the sector, not because we don't like it, because the size and or the availability of the of student housing has been limited, and it's something that is evolving now. And so we've seen the first generation of student housing companies, in fact, coming to Central Europe. You see it's very popular in Western Europe, of course. It's an asset class that's well established. It's not really an asset class that's well established yet. And so it's something that we've worked very hard to access, and we have a couple of deals in our pipeline now that are in that sector.
Okay, that's interesting. So I found that in 2020, Revetas Capital founded Strategic Hospitality Investment Partnership Program to deploy a target of 500 million plus of equity with strategic partners. And your main target markets for placement of these funds are Germany, Italy, Spain, Portugal, and France, accounting for about 65% of the capital. So out of those 500 million plus, how much have you already invested? And has the market started to offer distressed assets yet?
So the hospitality platform strategy is really focused on a couple of key things, all right, which is important. It's not just we're buying hotels or hospitality assets at massive discounts or in distressed situations, because frankly,
but you would like if it's fast,
I
right?
I would love to. I'll buy anything super cheap if it's the right price, but that's not what's happening, and that's not what's going to happen in large part, in my view, across the sector. Um, First of all, we believe in the hospitality sector long term. There's a short term downturn or drastic downturn, which is going to put a lot of owners under pressure. Fortunately, the banks and most of the partners that are involved have cooperated to date and worked with owners because they've recognized that this isn't necessarily the owner's fault, that this crisis came along, and the encouragement of both the European Central Bank and the European banks is to support the sponsors. Having said that, ultimately, these assets need working capital. And so initially, the platform is designed to support hospitality owners that need working capital, that need a partner who can provide that capital. And the way that we've approached it is it's not pure capital for us. We believe that in this crisis, there's two components to recovery and to stabilization, or let's say three components rather. The first component is you need capital, you need some working capital, okay? The second is you need to really take a close look at your debt structure. How long is your debt in place for? Refinancing an asset will be unlikely in the short to midterm, and therefore making sure that you have a strong debt structure and perhaps potentially restructuring that debt to provide time and distance. Time and distance is the friend in this crisis. So you need that time. And as a provider of capital, we believe that the banks will be more sympathetic to restructuring the debt when new capital comes into the structure. So an existing owner works with us, we bring in working capital, that helps us restructure the debt and have the appropriate time for recovery. The second component to that is the management contracts. A lot of our older international management contracts were designed and were formulated on the historical performance of the management companies and their access to their booking systems, for example, the revenue management systems, et cetera. And that has evolved today so that there are so many different routes or different websites or apps that you can use to book rooms. We believe it's an appropriate time to restructure long-term international management companies to be more aligned with ownership, frankly. All right, to be more aligned with how a specific asset performs in a specific market. So regardless of what your brand is, to the extent that that's an international brand and you have a management contract with them, they will do a great job managing the big picture, but we feel there's more value to bring to the table managing the local picture. And therefore, the opportunity to realign ownership with those management contracts, given the current way that people are booking and the current way people are using hotels, and the shift, there's ultimately going to be, it has been a shift, and there is continue to be a shift in hospitality. I think that's very important. So that's the first component of what we're doing, is supporting owners, helping them stable their ship, providing capital for that. We have not deployed any of that capital to date. We've allocated it across both Central Europe and Western Europe, and specifically we've allocated it across Western Europe because we have a lot of hospitality experience. We have a very strong hospitality team, and frankly, a hotel, and depending on which city it's in, ultimately the day-to-day management of that hotel is, let's say, a large part of it is standard, and then a large part of it is based on the local market expertise. And we think we have those strengths. Where we see opportunities coming will ultimately be, in our view, Q3, Q4 this year. And that's what we're keeping, preparing for. In the meantime, we have, been in discussions with many different operators, many different banks, many different owners about how and what they need and the best way to support them.
When you say management agreements, would you say that you would actually take over the management and then keep the brand, or you would completely take over and dismiss the brand and go with independent? Is this something that you...
I mean, it's case specific, but I don't think we want to dismiss any of the brands to the extent that they were successful. I would look at it more as supplement what they do with a more hands-on and aligned approach. As I said, historically, the management contract, if you signed your management agreement 10 years ago or 15 years ago, and you got a 25-year management contract, the way that hotels were managed 15 years ago is frankly completely different than it is today. And so you need, and where those management contracts may not have flexibility or may not ultimately have alignment because of the evolution of the hospitality sector, it's an ideal time now to reposition those, to realign those. So no, we wouldn't be expecting to just get rid of management companies and put our own people in. We would expect to have a hybrid of a management contract, a franchise, a franchise agreement, whatever you want to call it. But the key component is the local market knowledge, really understanding segmentation, really understanding how to revenue manage that asset and that market based on your segmentation and obviously other market dynamics.
Okay, and so you would expect that some of the distressed assets will come on the market in Q3 and Q4, because last year when we've talked, everyone said Q4 2020, Q1 2021, but it seems that this government...
Well, I didn't say that. Maybe other people
No,
did.
you're exactly. But whoever we've talked kind of said the end of the year, beginning of this year. But then it seems that these governmental support kind of keeps people above the water.
Look, I think the way people, since we've now had, let's say, 3 of these waves, so-called waves of COVID, I think when each wave has happened, people have reprojected when a recovery could happen. And ultimately, the answer is when the recovery, in my view, or let's say the distress is going to happen when we know that we have the vaccines in place, things have settled down, and then the banks and the owners and big companies are going to take stock of their portfolios and see where they need capital. And, that will obviously vary. I mean, for example, a leisure hotel versus a 3-star regional versus a city center luxury versus a meeting and events hotel, they're all going to have different projectiles for their recovery. We will track those accordingly.
This is exactly where my next question is actually going. So in our previous podcast, it was really interesting because we had very different opinions on what asset classes within hospitality will be bringing more profits than the others. What's your opinion about that? Is it leisure that came from one person or city? Is it something else?
I'm not sure which. Sorry, go ahead.
No, go ahead. And I'll move on later when you.
Yeah, I'm not sure it's which asset classes will generate more profits, because that's really specific. But I would like to say that our view is the recovery of hospitality starts with leisure. Why? Because you and I and all the people that are watching this podcast can make a decision on their own to go and travel for vacation. Once the world is opened up, you can say, I'm getting in my car, going to the mountains, or getting on a plane, going to vacation. You can make that decision on your own, I hope. So we see that as recovering first, okay? And by the way, people have been locked up for quite a long time. They want to get out, they want to enjoy their lives, and they're going to do that. They're going to look for different places to do that. So the leisure market may shift. The summer market, which was more or less beach and sun and water, may shift to mountains and fresh air and mountain biking. We've seen a tremendous shift in the US for mountain resorts in the summertime. I think we saw the drive-to locations last summer benefiting from the concerns over traveling in an airplane. And we think we'll continue to see that to grow. Second is 3-star regionals. The salesman has to travel, the local IT worker has to travel for a week's meeting, and he's going to stay at his 3-star hotel in order to get on the road and do what he does. That's the second to recover in our view. Third is business and luxury. You may go on vacation to enjoy the summer holidays or spring, but are you going to go on a cultural holiday? Are you going to go to Paris for the weekend or or to any other location where you want to have a cultural vacation, long weekend or something. I think people are going to be a little bit more careful about that. And I think business travel, while a lot of people, including myself, want to get right back on the road again, it's going to just take a little time before companies are going to be actively pushing or looking to have their people on the road. And then the last is meeting and events. I mean, what company is going to ask 500 people or one of their employees or several of their employees to go into a meeting with 500-600 people? It's just not going to happen until this whole thing has, run its course. And no one knows how long that'll take, but it's not going to be 6 months, right? It's going to take time. People have to develop the vaccine.
You have listed MICE as your strategy. So do you think that there are going to be some good opportunities in the MICE market, big hotels that will be on sale?
I think, I think that the MICE market will experience the most protracted distress in this particular crisis. And therefore, it's, getting those assets back online. These are assets that are used to holding 500,000 people. They have all the infrastructure, all the catering, all the conference and events and everything, the setups. And there's a lot of people that work within that industry. And I think that's just going to take longer, and therefore they're going to be hit the hardest. And so, yes, we are interested in that sector. Will conference and meeting and events be the same as they are in the past? Question mark. So therefore, I think you will see more distress in that sector. It'll take a longer time to recover. So are we going to buy a big meeting and events hall tomorrow? No. Why? Because we just think it's not the right time. It's too far away in the J curve. But we do think it's going to have the most distress. I also think there's going to be a number of, there are not just meeting and event hotels, but there are cities that are well established as large meeting and event cities. Vienna being one of the leading conference and event cities in all of Europe, as an example. And there's a structural oversupply in hospitality in those cities. So when there's big events in town and the hotels are full, the rates are very high, but when there aren't, the hotels are empty and the rates are very low. So I think cities that cater to, and hotels that cater to specifically meeting events will suffer. There will be some oversupply, and that's a real interesting opportunity to reposition some of those assets and repurpose them. And
how would you repurpose them?
Well, look, again, it's asset specific, and
I know, but
we don't have any magic powder. Of
course, it's not
but the
every
answer,
hotel the same.
Sure, but the answer is, you can look at components of adding residential components to some of these big meeting and events hotels. The utilization of space. What's the future? Do we want to have office, leisure, play, live, work, play kind of thing in the same context? So really looking at the mixed use component of those. And in some cases, they'll just be complete turnarounds. And repurposing them to resi, repurposing to mixed use is probably the best approach. And some of the boutique hotels will suffer the same, the same fate, I imagine, where it'll just take too long for the recovery to happen, and therefore repurposing them towards residential might be the best use.
It's really interesting what you're saying, because I'm sure it's not. I didn't come up with something completely new, but I was thinking how maybe hotels in the future will actually be places where you will work. Maybe you will live, you will be able to rent a room. So everything actually in one building.
Look, we've considered that very carefully in the context of our hospitality platform and our existing assets, about how we can bring in elements of co-working, during the crisis, people were renting rooms just to come for a place to work alone, for privacy. So really thinking about that room as a flexible, not just office space, but office, working, rest. I think it's a great idea to be able to come to the office and be able to enjoy your workout, do your fitness, enjoy your lunch, relax a little bit, obviously work, but, create in a home like environment inside of the workspace. And depending on your hotel, I think, that's something that's very, very interesting, bringing in, different components of how we live and work into the hospitality sector.
And you can actually make the room being reshaped by the purpose that you need, depending on the season or the part of the year or the request.
Well, yeah, I mean, we're actually designing specific furniture now in our projects where we can take very simply, it's like my kids have see the Transformers movie. It doesn't exactly turn from a robot to a car, but it turns from a bedroom into a meeting atmosphere or a working atmosphere quite easily. And I think that is actually something that's attractive to people, because you can come in, work, take a nap, take a shower, put your suit on, go to your meeting, which can happen downstairs, have your lunch meeting, do another meeting, come back, and you can basically use that as your home base.
Okay, let's move on. So on Wednesday, 17th, EU announced they plan to develop a digital green card certificate for safe travel. This should be in place from June 1st. And what do you think about that?
Well,
It's an investment question, but
yeah, it's a little scary. I mean, you mean like a vaccine card? Yeah, I mean, look, I think ultimately what I've said about this crisis from the beginning is, if we all work together, the virus was the enemy, and if the world worked together as allies and had all taken similar steps, we would have been on the same curve. The challenge is today that everyone's reacting differently, and therefore we're on a different curve. That means that you can't really, the marathon doesn't get won by the first runner. It gets won when the last runner comes in. And that means that in this particular case, until all the countries have gotten onto the same curve or gone through the same herd immunity or are at the same point of vaccination, we're going to have just different curves, which is going to impact the ability to travel. So I think ultimately, to regulate that, a vaccination program which allows people to travel if vaccinated or with testing makes sense from a commercial health perspective. From a personal perspective, obviously, I don't like to be told, I don't think anyone wants to be told you have to take this to do that. But it's a choice you have to make. But ultimately, if that opens up the travel corridors, if that helps jumpstart international travel, then it's very, it's smart, and they shouldn't be implementing it as soon as possible.
Now, my last question. I mean, Revetas has some specific ways of operating and how you see business. What would you say it's your strength in comparison to the big funds, investment funds that own lots of hospitality investments? I won't name them, but the biggest US funds. So what would you say it's your strength?
Look, our strength has consistently been our presence on the ground. We're in 11 countries with over 140 people, and these are people that are living in our buildings, living in our hotels. And so we've always been bottom up fundamental real estate investors and fundamental real estate developers, builders, and managers. So I think our strength and the performance that we've been able to generate across our hospitality platform, but also across the other asset classes, is having the people on the ground that know the market. When we first entered the hospitality business in Slovakia, for example, we lived in the building, and we were able to very quickly understand what the dynamic of that asset in the market was. And I think that's something that the big guys are able to do with large international operators on a more macro level. But we found that being on the ground, I can drive 20% more profitability by managing that hotel in that market, knowing what the idiosyncrasies of that market are, knowing how to drive the revenue management versus using a global or European-wide system that says, here's how you do revenue management, and you have a cookie cutter system. we think that's helpful as a guiding, as a guide, but ultimately the way you manage a hotel, revenue for manage hotel in Paris and in Berlin and Vienna and Bucharest or in Prague or Warsaw is all going to be completely different. It's going to be specific to that asset. So I think that's our strength, is really being the hands-on guys and girls that create value at the local level. And that's that extra 5, 10, 15, 20% that can make a huge difference at the end of the day.
Well, definitely. Okay, well, Eric, thank you very much. This was very insightful. Thank you for joining. I hope our audience will really love the interview. And you said you're momentarily in Miami, in Florida. So I wish you a safe return to Europe in a couple of weeks or months. And
yeah, we're coming back. We're going to give it a go.
Exactly. And I really hope that our next talk will be in some better position with the maybe in person somewhere having a coffee.
That would be very nice. Thank you very much for the opportunity. I hope that your audience also it resonates with the things that I said with your audience, and look forward to speaking again soon.
Thanks, Eric. Bye.
Thanks. Stay safe. God bless.
Bye-bye.